What's up, everybody? Welcome back to Cilinix Crypto and welcome to a very much needed new trading education video, all right? I think I made like two weeks ago, and I kind of wanted to do like 4 or 5 a week, even though it's quite hard to find the topics, but quite busy. Markets have been very bullish, so it takes up a lot of time as well. But still, right now we're back, all right. And I thought of a subject to talk about, and I couldn't find a better subject for these times than how to predict when we're going to crash, all right, in these super bullish market circumstances. So we'll be talking about how to kind of see it coming, at least well, not necessarily a crash, all right. When you think about a crash, you think about a huge drop with all cryptos, and that they're down, all right, that they're actually down. I think right now we're getting into way more bullish market circumstances, so you will not have a crash like we've seen, for example, with FTX, except for if we actually get some bad news. If war breaks out in the world, God forbid, then you'll see a real crash. But you cannot really expect that, all right? You cannot really predict that, and why would you want to predict that? I mean, you'll probably have bigger problems, all right, then. But all right, there is a certain crash, which sometimes is also referred to as a flush, which you can expect, all right? For example, a move like this, which is also, I mean, it's usually followed by less bullish market circumstances. So in that sense, it really is a crash, all right? And that one you can predict to a certain extent, and that's what I wanted to talk about. First of all, what you'll need, and I'll quickly refresh my camera, what you'll need is funding rates, all right? So you go to CoinGlass.com, all right, so coinglass.com, here you can see coinglass.com. My dog is doing all sorts of stuff in the background. You go to this website, which this might be too small. You go to this website, all right, and what you do then, that's this website, then you go to the top right here, funding rate heat map. And what you'll see there, it will standard stay on this. What you'll see there is the funding rates across the markets. So basically, the more yellow it is, the more you have to pay if you want to keep your long positions open, all right? And the greener it is, basically, the less you have to pay, all right? So what this means is that at this moment, the market is super over leveraged. That's what it is, because a lot of longs are opened compared to the spots. And the long contracts are valued higher than the actual cryptos. So all the big traders, all the whales, but also you and I have to pay bigger fees to hold those positions open. Now, what we've always seen in the past is that if these funding rates stay high for too long, you get a crash or you get a flush, something like this, which usually results in a consolidation. Could also be something like this, but it depends on the fundamentals. The fundamentals right here is that we just had the ETF, so there was some sort of a gap of fundamental bullish momentum. Right now we have the Bitcoin halving, so I think that the next crash we get, which I do think is pretty soon, historically seen and statistically seen, that has to be coming. I think right now, with the halving in mind and with the ETF inflows, I don't think Bitcoin is going to crash much. Now, across the markets, though, the Bitcoin dominance is getting quite high. So what that means is that you can check out Bitcoin to spot the crash, but altcoins usually crash down more, where Bitcoin, with all the ETF inflows and the bullish fundamentals, at this moment, it will probably not crash down that much or not spike down that much. And in general, Bitcoin always falls down less hard. However, if you spot it for Bitcoin, you should expect altcoins to fall down much more. All right. So how to spot it and how to predict it, it's difficult to predict. All right. It's in the past, usually what happened is the price consolidated for a little bit, for like a day, or right here, it consolidated for 5 days before it crashed. I think if you look at the market right now, if you look at the funding rate, historically what has always happened is that the funding rates here, for example, it was about 2 weeks of high funding rates before we crashed. No period is the same as the other. I mean, basically this entire period of time where the funding rates were quite high was about a month. All right, so if you think about that, this all started the 13th of February. That would mean that we still have about 2 weeks of bullish momentum left. So it's hard to predict. But in general, if you see something like this and the longer this goes on, you know that the probability of a crash increases, all right? And then something else you should know is that, like I said, altcoins usually fall down harder. And basically what you need to look up is how high the funding rate is for a crypto. Because if the funding rate is higher, so let's say here you can see all the funding rates, what you can see is that the funding rates for a coin like Matic across the board are higher than, oh no, I actually wanted to say Solana, but Solana is very high right now, as you can see. For some exchanges, it's 0.08%, 0.1%. That's much higher than, for example, BNB, where the funding rates are still normal. So you can expect Solana to drop down much more than BNB. You can also see that Litecoin, for example, it's not that high. So you can also expect Solana to drop down harder than Litecoin. So that way you can kind of predict how high the likelihood of a crash is. You can also see how, or at least you can kind of predict and estimate how big the flush, how big the crash will be for certain cryptos. The higher the funding rate, the bigger the spike down. Just in general, you can have a little bit more caution, all right? So there's 2 tips I want to give you with dealing with this, all right? Because like I said, no one period is the same. We've had high funding periods throughout time. As you can see, none of these periods has been the same so far. So you cannot really predict it completely. However, there are some things you can do with it, all right? So just in general, the longer the period of high funding fees goes on, the more likely we're going to have a short-term crash. And then apart from that, you could also just look at cryptos that have a lower funding rate to trade. You could look at cryptos that have a lot of momentum. So if you want to trade them, you can easily, like if a crypto has a lot of momentum and you enter at the right point of time, which is difficult to do, then usually the crypto just goes in the right direction initially, and then you can put your stop loss at entry and you're safe. I would not do that too quickly, because then a stop loss sometimes turns into a stop profit. However, something like that helps. And then apart from that, the one I like the most is buy spot. All right. Buying spots, buying spot positions, there's nothing wrong with that. And if you buy a spot position for a very strong crypto, what usually happens for after a crash like this is that sure, it drops down after you bought. If you bought at some point of time, it spikes down. But if it was a futures trade, it would have hit your stop loss. But if it's a spot trade, so if you don't trade with a stop loss, which I usually do with spot trades, it's longer term holds. What it does is, yes, it spikes down, but if it's a good crypto, if it's a good trade setup, it will be back in no time. All right. So yeah, I hope there was some value in this video for you. In general, if you do have any questions, because maybe this is a little bit more of a difficult topic, let me know. I'll leave a link to the funding rate heat map down in the description as well if you missed how to find it. For now, thank you for watching. I hope you all make some good profits, and bye.